Good evening, friends. Welcome to my channel, Nifty Trading in Rules and Setup. And this is the first sample of the post-market analysis that I shall be giving it to you from 1st November for a month. If you like this, then do let me know. I'll continue from 1st of November. Else, if you don't like it, then I will not continue on it, okay? And in this, I shall be briefing you as to how the setups are to be done, what are the rules to be followed in which type of market. Clear? So friends, this is my actual setup. And when I share my setup on the pre-market analysis, I go to the training part and then I do it. But this is my actual setup. Now, when I do my actual setup, there are a couple of lines I keep it drawn, which is the long-term support line, which is started from 2020 March. One support, first support, then second support we took at the June, and then it is yet to take the third support. So friends, someday or the other, kabhi na kabhi to ye support line pe aake rukegi. I'm waiting for the day to come. Now, then there is one more line, which is the blue line, which is the support from the bottom of 20th of June and the bottom of 30th September, and this third point is still not touched. So again, I'm waiting for the third point to be touched. Then there is a red line, which is the resistance, first resistance line, since the market is below this line, and which is on between 6th of October and again June. And there is the fourth line, which is the upward resistance line, the black line. Now, friends, these four lines are my basic guide rails. So whenever if the market is going up and touches any of these lines, I know that it will take a resistance from there. So I have either book my profits or I have to take a short from there. If it is touching the blue or the red line, then I know I have to again book my shorts if I'm in, or I can go long from here. In addition to that, friends, there are two bigger channels that I have kept it on. One is the monthly channel, which is from how the Nifty is moving in the last 1 year, and the blue line is the blue dotted is the midpoint of that line. And then there is a smaller channel inside it in which the Nifty is moving, and the red is the smaller dotted line. Okay. Now, whenever it comes to the dotted, either it will go up or it will come down. So either it trades on the first, on the upper half, or on the second half. So these lines are basically my guide rails. Now there's something called Panoti line. Now, what's a Panoti line? Now, friends, if you see this trend line, which is from 19th of October, then 18th of Jan, then 4th of April, whenever this market has touched this line, it has taken a resistance. Now, except for here, it went up, but I've kept this line drawn because somehow I feel that anytime it touches this line, something or the other is going to happen. So I call this as a Panoti line, and I get scared about this line. Okay. So with this setup in place, I start my trade. I go to my 5-minute, and then once I go to my 5-minute chart, what I first do is, this is my 5-minute chart, and as you see, this is up to 17th of October because I have put this on a bar replay mode so that you can see it live. And first thing that I'll do is I will draw the previous day closing, because today when I saw the market in the opening, the market was opening a huge gap up, more than 100 points. So in that case, I only draw the previous day high or the previous day closing, whichever is higher. Mind it. Previous day high or previous day closing, whichever is higher. Now, friends, the market has moved from the low to high the previous day. That means it has moved from 17,106 or 17,100 to 17,300. So it's moved 300 points. So which means that the market has shown strength. And after that, when the market is opening gap up, it definitely means that it is still showing some strength. So by seeing the pre-market, I realized that the market is opening above this particular red dotted line, which is the midpoint. So I thought to myself, hey, look here. If the first 5-minute candle does not close below this, stays above it, then with just this line as my SL, if I take a call, then what would be my SL? Just 10 points, right? But what can be my reward? My reward can be up to this, at least up to the Panauti line, at least up to the Panauti line. So that's a risk worth taking, because I'm talking about 425 to 520, 100 points reward with a 10-point risk. Why not? So I broke my rule today of the 100-point gap up. And the moment the market opened, so let me open the market now. So I'm opening the market now. So I'm doing the play and the market opened. Okay, I stopped it. So the moment the market opened, I waited for the first candle to form. And at this point, I took a call. Somewhere here, I didn't even wait for the full candle to close, but somewhere here, yeah. Moment it closed, I took a call. I kept the SL as here. So if you see, friends, I took a call at around 17,463, and I kept an SL at 17,423, which was close to a 40-point SL. Yes, this was a big SL. Had I taken the call at the opening tick itself, my SL would have been lower. But anyway, that was my thought process. Okay. Now let's see, friends, what happened. After that, I sat on the call. I did not exit. Now, in between, I did one more thing, which I should tell you, that since it is opening gap up of more than 100 points, by standard principle, I will draw the 1030 line, which is here, 1030 line. Let me make it a little bit bigger so that, 1030 line. And I'll also draw the 2 o'clock line here, 2 o'clock line. Rule is that if from the first candle, 9:15 to 10:30, and I will also draw the 9:15 low. So this line also I will draw here. If the market is going up, if the market has opened gap up, the rule says if it's going up and coming down below this line, then I shall take a put, but that has to happen before 10:30. So if before 10:30, the market is going up and coming down and breaking this, I'll take a put, or I will take a put if the market after 2 o'clock is breaking this particular first candle high, first candle low. Clear? Two situations I will take a put. First situation, if the market is breaking the low of the first 5-minute candle before 10:30, I will take a put. Or if the market is breaking the low of the first candle after 2 o'clock, I will take a put. In between 10:30 and 2 o'clock, I'll not take a put. That's my rule. The second rule says that I will wait till 10:30, and at the 10:30 high, at 10:30, I will draw another line. And if that line, if the 10:30 high is broken after 10:30 and before 2 o'clock, and the market goes up, then only I'll take a call. Otherwise, I'll not take a call. There's a fourth rule which I'll tell you. So I took a call here and then I waited. Look here, I waited here. I did not exit because I was waiting for it to see what happens at 10:30. Now, friends, see what happened at 10:30. It touched this Panauti line. Now I'll remove this line a bit. See, it exactly touched the Panauti line and reversed. I told to myself, Supriyo, please, it has touched the Panauti line and is reversing. So come on, exit. So I exited here. Okay. The second rule says, if the market has an open gap up and is taken reversal from 10:30, then wait for it to come down a few points, 50, 60, 70, 80 points. And at that level, then take a call. Now to do that, what I do is, since it is moving from down to up, I will draw a Fibonacci. I quickly draw a Fibonacci and I'll keep this Fibonacci in place. On this, between 9:15 and 10:30 itself, I do the Fibonacci. And my logic would be that as soon as it comes near and around the 60% retracement, or comes to around, say, 78% retracement, I will take a call. So here I waited to what does the market do? When the market then came down, again came down, I did not take a call, came down. But here, no, I think I took a call somewhere. No, I didn't take a call here. Yes. No, I did not take a call here. Yes. Now, if you see here, friends, what happened? The market came close to the 78% retracement from the top. And at this candle, when it turned green, I took a call again. This call, I did not sit for long, because you cannot sit for long. Now, friends, when you're taking a call here on the retracement, and this type of retracement would come every 30-40 minutes. If it is not breaking the high of 1030, so you have to draw this 1030, not breaking the high of 1030, and I knew this Panauti line is there, so it's not going to easily break the Panauti line. So I said, okay, so if it is not going to allow me to make money on the upside, like by going up, then I will wait for it to come down and take a call. So it came down, and then here, when it came down close to the 78%, I took a call and I exited it somewhere here. I again waited, and I did not take a put at any point of time. I again waited. Then somewhere here again I took a call, because if you see, the reason was that it is coming close to my 68%, 62% retracement. Normally from 78 and 62% retracements, the market takes a reversal. I took a call and I waited again, but this call was short and I exited at this candle. So friends, my entry and exits were fast. This is more of a scalping way, but this is the rule. The rule says that if it comes down 50, 60, 70, 80 points, take a call and exit at around, if you're taking a call at the retracement of 80 points, exit at 60 points, and so on and so forth. Do not wait for it to go way up to there. If it goes way up to there, all the best. But you should book your profits on the way up to there and see if it is breaking this. If it is breaking this, then again take a call. So that way the day happened. Then after 2 o'clock, what I realized, now see, the market after 2 o'clock formed, this 2 o'clock candle was, if you remove this line, was an inverted red candle, a green candle. Now, inverted green with a red follow through is not a very good sign. An inverted green, like this is not an inverted, if this was inverted red and a red, I would have been very happy. Had this been a Chintu candle opposite way around with a hammer on the top, then I would have been very happy. But this was not a very good candle for me, so I waited. Now, I did not take a put, because the rule says what? I can take a put only if this line is broken. Now, friends, many of you would have got stuck here, I'm sure. Why? Because this was a very dangerous candle that formed, this candle and this candle. Now, I'll show this to you why I call it dangerous candle. Okay. So, what happened here? Why I call it dangerous candle? Because after this, it formed a big red, and then again it came down way up to here, and all of us thought it's going to break this. But friends, till that is, all of us think a thought that is going to break, an actual break. इसमें ज़मीन आसमान का फर्क होता है. A break means it has to cross the low of the 915 low break it, close below that, and the next candle has to start from below. Then only I'll consider it as a break, otherwise not. So I did not take a put. In fact, I took a call. Okay, because it was as per the setup. It has not broken, and then luckily it gave me some profits here, and my day ended there. So this is how I shall give you the inputs with respect to trading in gap up, and how to trade, when to take a trade, what to use when to take a trade. So that's from my side, friends, on the post-market analysis. If you like anything, if you like this, then please let me know. And whatever additional things that you want in this, do let me know. I'll include in it. Thank you so much. Cheers, sayonara, and bye-bye.